Imagine you hear about a massive party downtown, the kind everyone's talking about. Music's pumping, the streets packed with people eager to get in, everyone's buzzing with anticipation and excitement, the energy is palpable. That's a high-volume party, a place where things are happening. Tons of people are there, actively participating, tons of energy, creating a vibrant and dynamic atmosphere. In crypto, volume is your party meter. It tells you how many people are actively trading a particular coin. Now, picture the opposite. A completely different scenario. 3 people awkwardly standing around, stale chips sitting untouched, awkward silence filling the air. That's low volume, a sign that something might not be right. No one's interested, and the energy is completely flat. Before you invest in a coin, do your homework. You want to know if it's a packed party with lots of action or a ghost town with tumbleweeds blowing through. High volume means lots of buyers and sellers are actively engaged, easy trades can be executed quickly and efficiently, and a healthy market overall, indicating strong interest and liquidity. Low volume, what does that tell you? It's like opening a coffee shop on a deserted street, a recipe for struggle. No action, hard to make moves, and difficult to find buyers or sellers. Volume is your first health check for any crypto investment you're considering. It shows you if people genuinely care about the project or if it's just empty hype and marketing. Think of it as checking the guest list to see who's actually showing up and who's just RSVP'd. It's a crucial step before you spend your hard-earned money. Knowing volume gives you a peek behind the curtain, a glimpse into the true activity. It reveals how much genuine interest and momentum a coin really has in the market. It's the simplest way to make sure your investment is joining the right party, the one that's actually happening. So, what exactly crypto volume? It's a term you'll hear thrown around a lot in the crypto world, but what does it actually mean? Let's break it down. Crypto volume is simply the total amount of a specific cryptocurrency that has been traded during a particular period. Think of it as the total number of coins or tokens that have changed hands. This period is usually measured over 24 hours. It gives you an idea of how much activity there is surrounding a particular cryptocurrency within a single day. It's not about the price of the coin itself, but about how many coins have actually changed hands, regardless of the price they were traded at. Volume focuses purely on the quantity of transactions. Think of it like a scoreboard. It's a running tally of all the trades that have occurred. For example, if $20 billion worth of Ethereum was traded today, that's a sign of huge activity and significant interest in Ethereum. It indicates a lot of buying and selling is happening. Volume is the universal language of crypto. No matter where you are in the world, or which exchange you're using, volume is measured the same way, making it a consistent metric. You'll see it displayed next to every coin on cryptocurrency exchanges and tracking websites, right alongside the price and the 24-hour volume. These two metrics are usually presented together. Price is like a snapshot. It tells you the current value at a specific moment. But volume is the movie, showing all the action, the intensity, and the overall interest in that cryptocurrency over time. High volume means lots of people are actively trading, indicating strong interest and liquidity, while low volume means barely anyone's interested, suggesting a lack of activity and potentially lower liquidity. It's the best way to quickly gauge whether a coin is hot and trending, or if it's fading into obscurity. So, always check the volume and consider it carefully before you jump in and make any trading decisions. It's a crucial piece of the puzzle. Imagine stepping into your local shopping mall. Picture it on a quiet Tuesday morning, a serene atmosphere where shopping is a breeze. You can leisurely browse through stores, take your time making decisions, and enjoy a peaceful experience without any rush. In the world of crypto, this calm and unhurried environment is analogous to low-volume trading. Now shift your perspective and think about Black Friday. Absolute chaos, incredibly packed stores, amazing deals flying off the shelves, and it feels like everyone is buying and selling at once. That's what high volume looks like in the crypto world. In crypto, high volume signifies that it's easy to trade, orders are filled quickly, and there's plenty of activity. Prices move fast, reflecting the intense buying and selling pressure, and there's a palpable sense of excitement and opportunity in the air. Low volume? It's sleepy and uneventful, making it hard to trade efficiently, as there aren't many buyers or sellers. Consequently, prices barely budge, and the market remains stagnant. On Black Friday, the overwhelming demand can cause prices to spike dramatically or crash unexpectedly. The same phenomenon occurs in crypto when trading volume surges. High volume brings significant price swings, creating both risks and exciting opportunities for savvy traders. Low volume, on the other hand, means you might find yourself stuck holding your coins for an extended period, waiting for the market to pick up. So before you dive in, ask yourself, is this particular coin experiencing a Black Friday level frenzy, or is it more like a quiet Tuesday afternoon at the mall? The answer to that question will tell you everything you need to know about its current market action and potential risks and rewards. High volume is the hype machine. It confirms what's real in crypto. If a coin's price jumps and volume surges, that's the crowd backing the move. It's legit. A price spike on low volume? Could be a fluke or even manipulation. High volume means the market agrees, like a stadium cheering, not just one person clapping. If prices crash on high volume, it's a real panic. People are rushing for the exits. Volume adds credibility to every price move, up or down. It's the difference between a rumor and a headline. Traders watch volume bars for the truth behind the price. If you want to know if a trend is real, always check the volume. Pros use volume as their lie detector. If a coin suddenly jumps, smart traders check if volume spiked too. High volume? It's a real breakout. No volume? It's probably a fake out. Don't get FOMO'd. When a coin's been rising but volume drops, that's a warning sign. The trend's losing steam. It's like a runner slowing down before collapsing. Volume divergence is key. If price goes up but volume goes down, something's off. The price might be lying, but volume tells the truth. Spotting these clues helps traders avoid traps and time their moves. Volume is the most powerful tool for seeing through market tricks. Don't trade blind. Let volume guide you. Here's the bottom line. Volume is your best friend in crypto. It cuts through hype and shows you what's really happening. High volume means a healthy, active market. Low volume means trouble. Always check volume before you buy, just like checking a car's engine. It helps you confirm trends, spot reversals, and avoid emotional mistakes. Volume is your first step in smart investing. Next time you open your crypto app, look at price, then volume. Ask, is this a packed party or an empty room? That simple question puts you ahead of the crowd. Volume is your guide. Never trade without it.